Hello, hello. Louis Yanis here, WealthNet Investments. I was having a conversation with JP Tremblay, my company's chief investment officer. I've known JP Tremblay for, oh gosh, 20 years. Him and I have a lot in common. We do a lot of things together. We've been through a lot of ups and downs in the markets, investing, battling it out for years and years. And we just have a great colleague relationship. And so he does a lot of work, and we both work independently on the investment management side. And we come together and we have our weekly meetings. And in our meetings, we talk about some of the trends that we're seeing. And the trends that we see right now, one of the things that came out was there's three things that we see that I think is going to change everybody's money. And everybody needs to be prepared. Everybody needs to be prepared as an investor, people who own, I don't care if you own real estate, stocks, bonds, 401k plan, whatever it is. And when I tell you what these three things are, you're not going to be like, oh my gosh, this is earth shattering. However, it's really, really important to think about these. And I want to talk, we went through these, by the way, and we were going through what if this happened? What if that happened? And we do this every week, right? And one of the things that we came down to was the realization that there are three things that the government can do or will do one way or another. They're going to make three critical decisions that are going to affect your money in the next 5 years, 10 years, 3 years, 1 year, and beyond. And we're at a critical juncture where it's important to understand what these three things are. And I'm going to list them out, and I'm going to talk about why they're so important and why you need to be prepared. So the first thing has to do with redistribution of wealth. The government is going to be making some serious decisions about how they're going to redistribute wealth. They have to make these decisions. It's not something that maybe they'll do. They will absolutely do something about this. And what does that mean, redistribute? That's just a fancy way of saying they're going to make decisions about who's going to get more of the money that's in the economy and who's going to get less of it. Now, you may be aware that there's cryptocurrencies that are out there. You probably are, Bitcoin, et cetera. And you may also be aware that the central banks across the world are creating their own currencies that are going to allow them, much like in the crypto world, to be able to track every single dollar, where it comes from, where it goes. That is on the plate, and that is slated to happen. So that is going to affect people's money, and you have to be prepared for that. So now let me talk about the second thing that's crucial and critical that's going to affect everybody's money. And it's not a matter of will they make this decision? No, it is more of a matter of to what degree will they make this decision? Okay. And the next one here has to do with spending. What are they going to do about spending? Are they going to continue on the path that they're on right now and continue to spend at a rate of about 10% of GDP on net spending? No, deficit spending. Will they continue that, or will they start cutting that back? That decision will affect everybody's money, because at the rate that we're going right now, it's unsustainable. Will we have the gumption and the ability to change that? Okay, now let me talk about the third thing. The third thing is whether or not the government continues to print money, or whether they decide they're going to stop printing money to some degree. To what degree will they do that? All of those three things are so important. And let me tell you why it's so important. The first thing is, and this is very real stuff, people think this is all pie in the sky. This affects you. And this affects you primarily from the interest rate, right? The interest rate and the growth rate in the economy. Because in each scenario, it has a different implication for what's going to happen to interest rates, and therefore what can happen to your mortgage rate, to the value of your home, to the value of your 401k and your stocks and bonds, to the value of everything that you own and the value of your money itself. How much you can, when you pull out your wallet, how much will you be able to pull out that wallet and take? I happen to have only $1 in my wallet right now. That's what happens when you have kids. $1. How much is this going to buy? When I graduated from high school, a car cost about $3,000. That same car today costs about $50,000. I'm not that old, So that's the value being devalued, and the rate that that happens, it's going to affect you. And are you prepared for that? That's the question I keep asking. Are you prepared for that? There are ways, and we have ways that we know that we can help you understand how to deal with these problems. It's going to affect the growth rate. Let's just use an example. If the government decides that they're going to stop printing money at the rate that they are right now, that is going to reduce the supply of money, which will increase the interest rates, which is going to be competition, increased competition for stocks and bonds, which will lower the growth rate in stocks and bonds. It will also affect the degree to which we actually are encouraging employment. Right now, we are not encouraging people to go back to work. Are we going to continue to go on that path and watch our productivity go down and our growth rates go down? Or will we decide to let the free market work a little bit more and move more in that direction to increase our productivity and increase the growth rate in our economy? These are critical things, and you must plan for this right now. You can't wait. A lot of people are just, it's summertime, and we're happy that the pandemic is mostly behind us, and we're going out and having vacation, all this stuff. But I'm telling you right now, these three things are going to affect your money, and they're going to affect my money. And if you're not planned for it, if you're not investing in a way where you're going to be able to take advantage of prices moving higher, if you're not in a situation where you're going to be able to make money when interest rates go up, or if they go the other direction, then you're going to be at a disadvantage. So I highly recommend that you do a plan and look at your portfolios right now, people. I've never seen anything like this. I've been doing this for 27 years, and me and JP were sitting there talking about it. This is something that is in our lifetimes we haven't seen. And this is something that people need to plan for. You can't just assume that you can invest like your parents did. You can't just assume that you could do it the old way and that you're going to be bailed out. You must be proactive in your investment strategy. So here's one of the things that I've decided I'm going to do. I put a link here in the notes here. And if you have any comments or questions, go ahead and comment here. I'm here to talk. If you want to ask me a question, ask away. All you got to do is just type it in the comments. I put a link there, and you could see information about a planning strategy. We call it the 360 financial planning that can help you make those smart choices for your situation, because everybody is different. Some people have a different mix of assets, and everybody needs to be looking at how they're positioned and what they can do given the cards they are dealt with to deal with this economy. And to this economy, a lot of people think the economy is kind of some far off thing that doesn't affect me. And it does affect you. It affects everybody. And we're at the point now where these kind of policies, these three main levers that our government is making a decision on, are going to impact everybody. How are they going to redistribute wealth? And where do you fall on that, right? Are you ready for that change? That could mean changes with taxes, big time. And the other is if they cut spending back, how is that going to affect you? How is that spending going to be affecting you? And the third thing is, when they print money, at what rate will they print that money? That combination, those three combinations of big policy results or decisions are going to affect the real growth rate in the economy, interest rates, the value of your stock and bonds, the value of your home. Right now, we see crazy stuff that's going on in homes. I am amazed. I calculated that my home price went up 36% in the last 12 months. That's crazy. Now, one of the things that we've noticed is that private equity on Wall Street has gone crazy in the real estate market. The private equity firms they have so much cash because there's so much money being flown in the system. The private equity firms are out there and they're going, look, what am I going to do with this money? And you have companies like Zoom who are going out making cash offers, and they're charging next to nothing on the transaction cost to get the deal done. I mean, I'm talking fractions of a percent to do the deal. They're turning around and they're selling that real estate to private equity investors on Wall Street. And let me tell you, the guys on Wall Street that are running these funds, they could care less what these returns are going to be, because they're earning fees on those assets no matter what. And they're flush with cash and they have to put it somewhere. So what's happening is it's not just mom and pop going out buying houses now. there's this private equity thing has gone crazy, and people are not being rational with the values. And we have actually had clients who have sold their house and paid little transaction costs to get this done. This type of behavior will keep going as long as the punch bowl is allowing this to happen, right? But you're not going to see these types of growth rates forever. And people are getting a little bit crazy right now. There's a little bit of supply out there in real estate, so everybody's very bullish, and I do think that that's going to continue for in the short term. But there are some longer term implications that we need to be aware of. So if you're one of those people that has been thinking about selling your home and maybe downsizing, I mean, we had one scenario. We had a client, multi-million-dollar client, who downsized the home and bought another home and not paid a mortgage at all, did it not pay a mortgage payments by using a reverse mortgage, and then took equity in that home and built an income stream for them. It really helped them with their particular retirement plan. But these types of levers that are being moved right now, we're finding that they're affecting people in very big ways, not small ways. So we're going to be watching the government very, very, very closely in how are they going to be making these policy decisions right now, because the compounding, it is unsustainable. A lot of people don't understand that there's a lot of debt that's off the balance sheet. I'm talking about, all the entitlement debts. They're like debts as well, right? There's an implicit debt value there. And that number is multiples more than what our current budget deficit is. It's many times more. So the impact of that is crazy. Now, the government can either pay it by trying to redistribute the wealth. We know they cannot redistribute enough wealth to get that to pay the gap. So they can cut back. We know they can't cut back enough to meet that goal. Cut back on spending, or they can print more money. So we know, we triangulate into the situation. We know they're going to continue to print money, and it's just a matter of what degree are they going to do this. If the government balances that in a way to where it doesn't cause a problem, because we have this big gap right now between people who have money and people who don't have money, and that generally historically has led to more and more strife. And you wonder why the politicians on the left are so populist, and so are the politicians on the right. They're both using populist rhetoric. That has to do with the fact, mostly due to the fact that we have this divide in wealth that has been, and we can get into a long discussion about this, has been generated by public policy. So right now, go to that link that I put over here and pull up that PDF and look. This is the process that we're recommending that people go through right now to make sure that you're on track for this kind of a scenario. The first thing is you have to, build your vision. What is that vision that you're looking for? Identify and prioritize those objectives. And then the second thing is to get the insight into knowing where you are right now, identify your gaps, your strengths, and your financial picture, and then to verify exactly where you are, and then to design and do an assessment to design your plan to get to deal with these problems, and to be a winner in this situation. That's my goal, is for people to be winners in this scenario. I mean, that's what it's all about. And it's not just about making that one transition to get in position correctly, but it's also about that ongoing navigation of your wealth and how to manage that wealth and keep your money moving in the right direction over time, and adapting to change, and making sure that you have the information at your fingertips so that you know where you stand at all times. This is what I think people need to be focusing in on. After you've had your vacation, after you've had some time to rest, then it's time to dig deep while it's slow and people are quiet, because these decisions are big and they are not going to stop. They are going to be impactful. I know that's kind of a crazy, and I don't normally talk this emphatically about these things, but the more you analyze, the more you dig, the more you realize you must take action. And if you don't have a solid 360 financial plan right now, now's the time to do it. Go get one. Go get one, because I don't know what the saying is about planning that is the most impactful right now, but I do know if you go to that website, wealthnetinvest.com, you can also learn more. You could just click the button that says schedule a call, and then you'll talk to a financial advisor, somebody who's credentialed, at my firm that I own. You may talk to me. I deal with the clients that have $1 million or more, but make the call if you haven't, or call your financial person. Make sure you're dealing with a fiduciary advisor, somebody who has a legal obligation to act on your behalf, not on the agents for a firm. Somebody who is, it's like a lawyer or a attorney or a CPA acting as a fiduciary, fee based, and ask the question, if you could only get paid for a result, what is it that result that you're going to get talking to that advisor? So, but if you don't know anybody, just give us a call, go to our website, give it a look. It's no obligation, by the way, and we'll give you a second opinion. Get a second opinion right now if you don't have something going on. Otherwise, I'm going to try to enjoy my summertime here, but after today's investment meeting, I had to mention this. All right. Hope you're having a great day. Talk to you later. Bye.